Hey everyone, welcome back to Corporate Decoder, the place where we take those boring company reports and turn them into something you might actually want to watch. Today we are diving into a report that involves reverse splits and acquisitions. Sounds like a company trying to do a magic trick. Let's see if it works. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below for more in-depth discussions. Today we're looking at CFN Enterprises. This report tells us they bought a wine and alcohol importer, and they also did something called a reverse stock split. Basically, they are trying to make their stock price look better. Are they turning water into wine or just watering down the wine they bought? Let's find out. This report, filed on July 11, 2025, covers a few key events, with the earliest being July 1, 2025. Let's get started. First up, the big news, CFN Enterprises bought J Street Capital Partners. J Street is an importer and seller of wines and liquors. They operate in Nevada, New York, New Jersey, Florida, and California, selling to bars, restaurants, casinos, and hotels. And to buy J Street, which closed on July 1, 2025, CFN Enterprises paid with stock. They issued 1.5 million shares of their own common stock to the seller of J Street. Now, what does this mean? CFN is diversifying in the alcohol business. Buying a ready-made business with distribution in 5 states can quickly get them into the alcoholic beverage market. Of course, paying with stock means existing shareholders now own a smaller piece of the pie. To be clear, the 1.5 million shares issued to buy J Street haven't been registered with the SEC. They claim an exception to the rule, saying it was a private deal between them and the seller. Now, let's talk about the reverse stock split. In 2024, almost a year earlier, the company asked its shareholders to approve a plan. The plan was to do a reverse split of its stock. Basically, they would combine a number of shares into one, making the price per share higher. The range they proposed was between 1 for 2 and 1 for 50. That's a huge range. Imagine finding out whether you're charged $2 or $50 for the same item. The final decision was to be made by the company's board of directors. The reason for this supposedly was to try to get listed on the Nasdaq stock exchange. Nasdaq has a minimum bid price requirement, meaning the stock price has to be above a certain level. A reverse split is one way to achieve this. The shareholders agreed to this plan in 2024. Then in May of 2025, the board decided on a 1 for 10 reverse split. On July 11, 2025, they officially made the change. This means if you owned 10 shares before, you now own 1 share. The reverse split happened at 5:00 p.m. Eastern Time on July 11, 2025. If you had old common stock, it automatically became 1/10 of a share of new common stock. No cash was paid out, and no fractional shares were issued. If you ended up with a fraction of a share, it was rounded up to a whole share. So if you had 11 shares before, you would only have 1 share after the split, but if you had 15 shares before, you would only have 1 share. The stock will start trading on the OTCQB market under the new symbol CNFN on July 14, 2025. It also has a new identification number, 12529C308. There was no change to the total number of authorized shares, which remains at 500 million, and the par value stayed at $0 on-in per share. Why do companies do reverse stock price? Is too low, and they want to avoid being delisted from an exchange. It can also make the stock look more attractive to some investors. However, it doesn't change the fundamental value of the company. It's like cutting a pizza into fewer, bigger slices. You still have the same amount of pizza. Finally, there is an exhibit. Exhibit 3.1 is a copy of the Certificate of Amendment to Certificate of Incorporation. This document makes for very light reading. The report was signed by Brian Ross, President and CEO, on July 11, 2025. So now let's step back and look at the big picture. CFN Enterprises is making some interesting moves. They are getting into the alcohol distribution business by buying J Street, and they are trying to boost their stock price with a reverse split. Is this a winning strategy? It's hard to say for sure. On the one hand, diversifying into a new industry like alcohol distribution could open up new revenue streams and growth opportunities. J Street already has a distribution network in key states, which could give CFN a leg up. Also, the company board is very actively addressing the failing share price on the market. On the other hand, paying with stock dilutes the value for existing shareholders, and a reverse stock split is often seen as a sign of desperation. It doesn't fix the underlying problems if the company isn't performing well. It really depends on how well CFN integrates J Street into their business and whether they can improve their overall financial performance. CFN Enterprises moves, are they on the right track, or are they just rearranging deck chairs on the Titanic? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit the like button and subscribe for more corporate deep dives. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching, and I'll see you in the next video.